Hey guys, it's Yaroslav here again, and today we're going to be discussing options, binary options, and digital options, and what's the difference between all of them. Now, this can be a little bit confusing if you're learning this for the first time, but I will do my best to make it as understandable and as clear as possible, giving you real-world examples and making it really simple for you, okay? So, what is an option? Basically, an option is an opportunity. Think about it that way. It's an opportunity to do something, but you don't have to. You never have to exercise an option if it has gone against you. Now, there are calls. See how it's in green? Basically, a call, when you buy a call, you're thinking that the price is going to go up, up, up. When you buy a put, you're thinking that the price will fall. And some of these instruments are used as hedging instruments. Now, when we discuss options, you can actually sell or buy options. So you can sell a call or you can sell a put and also buy either or. The reason for that is the most you can earn, this is the easiest way to understand this. The most you can earn when you sell an option, basically you're creating a financial instrument. You're writing that option for another person, and the most you can make is a premium. So that's the maximum profit that you gain. But if the price goes against you, say you're selling a put and the price goes down, that's not very good for you. And say you're selling a call option and the price goes way up, that's not good for you. So it works in the opposite way. So you want to buy a call if the price is going to go up, and you want to buy a put if the price is going to go down. Now, put options give the holder the right but not the obligation to sell an asset at a specified price. The seller of the put option is obligated to buy the stock at the stock price. Now, investors buy puts if they think that the share price will go down, or they sell one if they think that it will rise. Now, put buyers, they hold a long position usually, and they buy this option in order to hedge against a market downturn. In the case of a market downturn, their put option makes money and they can close out their position in the stock market. Now, put sellers, they hold a short expecting the market to move up. Now, the worst thing that can happen for a put seller is, again, the market crashes, because that way their maximum loss is unprotected and uncovered. Now, a call option, a little bit easier to understand because it's in the direction of going up. Call options provide the holder the right to purchase an underlying asset at a specific price after a certain period of time. Now, if the price does not go up, then you do not lose money more than your premium. That, I guess, is the most important part of options, is that when you open these positions, you never lose more than the premium price that you pay. Now, when you sell the options, again, you do have the opportunity to lose more and you only make the premium price. Now, I found this very graphical explanation of calls and puts. And here we will look for a long call. Basically, we're buying a call. So this price is what we pay. And our profits go up as the stock price goes up. So I hope that's clear. Now, when we sell a call, here we have a short call. Basically, we make this money right off the bat. This is what we have. But as the stock price goes up, see how we go towards the right? As the stock price goes up, our profits decrease and we have unlimited potential for loss. Actually, that's not true. Sooner or later, the stock will hit zero, and that's where our losses cease. With puts, it's not the same. So a long put, basically, the the lower the stock price, the higher our profits are. And when we sell a put, the higher the stock price goes, the better for us, and we get to keep the premium that we got from selling the put option. Now, what are binary options? We here at Olymp Trade, we deal in binary options and digital options. So how are they different from real options? They actually come from the same basically source, the same technical aspect, but they're a little bit different, and I'll explain how. So a digital option is something that pays out if the underlying asset moves past a predetermined price. So we buy, say, euro dollar option, and if the price goes higher than where we bought at, then we make a certain percentage of that trade. If it doesn't go past that and it stays below the level that we thought that it would go higher, then the amount that we put on the trade, we lose that amount. So it's always fixed at the beginning of the trade. A loss is fixed if the asset price does not move past the threshold, either up or down, depending on which way we open the option. And a digital option depends on one thing. That's basically whether the underlying asset expires in the money at the time and date of the expiration. Very simple. Like I said, for instance, the euro dollar is trading at 115. You can only purchase a call or put with the strike price of 115. So you'll be in the money if the move goes above or below 115 during the time of the expiration. Now, a digital option is a little bit different. A typical binary option allows you to trade in relation to where we at right now. With a digital option, you get to change the start of the trade. Basically, you can buy calls or puts at a price level different than the one the price is currently traded at. Now, here's an example of what our platform looks like, and as you can see here, we have 5 minutes outlined in red, and you can trade digital options anywhere below 5 minutes. So 5 minutes and below, you have the opportunity of changing the strike price, which can be helpful in certain market conditions. Anytime we go above 5 minutes, we no longer can trade digital options, but it becomes a standard option, which is also tradable nonetheless. So that's it for today's lesson. Wanted to thank you guys for your time. If you have any questions, please feel free to email me. And next, we're going to look into what is Forex and what our platform looks like and how Forex differs on our platform. Thank you guys very much, and good luck trading out there.